Good evening, everyone. Welcome to USAA. My name is Bill White. I'm your host for this evening. I'm a Navy veteran and I lead the retirement business here at USAA. I'm joined tonight by some of my best friends at work, Cheryl, Lori, and Thomas. Cheryl Wilson's our advice director, helping shape the advice that we give our members every day. Lori is one of our retirement specialists. We'll have a cameo by another one of her teammates tonight as well. And Thomas Sovereign's running things behind the scenes, building and pricing the products that we bring to market every day to serve you. Now, this webinar is part of the benefit of being a member of our company. We own USAA together. I'm proud to be a member alongside of you. We're focused every day on the military community and the needs that they have. Tonight, we're going to focus on a key topic that our members really care about, and that's Social Security. We've had a webinar series this year. Social Security is one of our most popular topics. Tonight, we're bringing back some of the additional questions that members asked in an earlier webinar. So if you dialed into that webinar, you're in the right spot. We're going to cover additional content tonight with a focus on three big topics: differences in the earnings that spouses have and the impact that has on Social Security, differences in age, and also survivor benefits. Now, there are many other Social Security related topics that you, I know, have on your mind. And to answer those questions, we have retirement specialists available each day to talk to. You can even schedule time with them. As we get to the end of the webinar, we'll tell you exactly how to do that. And tonight, we will have a number of specialists available until 8 o'clock Central Time if you're watching live. If you're watching on YouTube later on and recording, I appreciate you being here as well. Now, a few logistics. As I mentioned, tonight's webinar is being recorded. And later this week, if you've signed up, you will receive a link to see that on YouTube if you'd like to watch a replay. We encourage you to share that with your friends and family. It's on youtube.com/USAA, where you can see other USAA videos, including our other webinars in the series. We're going to hit those topics, as I mentioned, that were popular from our members in our last webinar. Because of that, we've disabled the chat function for tonight. So if you've dialed in before, we had chat in other functions, in other webinars. We won't have that tonight. These are going to cover your popular questions, and we're going to have a rapid fire Q&A session at the end based on member questions in the past. We will have some polls tonight that'll be interactive. And when we get to the end, because we always want your feedback, there'll be an additional poll that will ask for feedback about tonight's webinar. Now, with all that said, I want to let you know that, again, we serve the military community. And the way we focus all of our mind share on that is by having a focus on our mission, the mission to serve the military community. Military families around the world, here at home, whether they're deployed or here in the United States, are our focus every single day. And when we start meetings, we do something we call a mission moment. And a mission moment is special to USAA. It allows one of our teammates to tell their perspective on serving members or serving the military community with respect to our mission. Typically, that falls into two categories: someone telling about their service or the service of a family member, or how they've served members here at USAA. Tonight, we have another one of our specialists, Chris Stokes, and he's going to deliver our mission moment. Chris is an Army veteran, and he's the father of a U.S. Navy sailor. So I've asked him to come here tonight and share a mission moment with all of you. Chris, over to you.
Thank you, Bill. So good evening. Once again, my name is Chris, and I'm one of our retirement income specialists here at USAA. I have the privilege and honor of working with our members, whether they're preparing for, transitioning into, or living in retirement. Now, my biggest responsibility is helping our members live their best life in retirement by helping them to accomplish their goals. Now, I recently had the opportunity to work with a couple. We can call them Mr. and Mrs. Smith. They reached out to USAA with what seemed to them just a couple of quick, easy questions regarding Social Security. Now, I was more than happy to answer all of the questions they had about Social Security. But by getting to know them better and taking them through the retirement income planning process, I discovered there was a much bigger need than just questions surrounding Social Security. Mr. Smith had just retired a month ago, and Mrs. Smith will be retiring at the end of the month. But unfortunately, they did not have a distribution strategy put into place. Now, this is the most prevalent concern that I hear from our members. Basically, how do I turn my assets, such as my 401k, IRAs, and mutual funds, into an income stream to help me in my retirement? With Mr. and Mrs. Smith allowing me to work with them and showing them a retirement income strategy plan, I was able to help them with a Social Security plan that will have Mrs. Smith taking her Social Security now, while Mr. Smith will wait until the age of 70 to maximize his benefits. Now, this strategy will provide them approximately $1,250 more of guaranteed income each month. With the Social Security strategy now put into place, I was able to also help them with a guaranteed income stream from a portion of their assets, allowing them to cover their retirement income needs. By going through the process, Mr. and Mrs. Smith no longer have concerns about living their best life in retirement and can enjoy all the fun activities they have planned without any stress. Now, being able to help our members really enjoy their retirement is why I'm so passionate about what I do. Hearing the happiness and joy in our members' voice when they no longer have to stress about their retirement dreams is by far the greatest feeling. And with that, I'll turn it back over to you, Bill.
Chris, thanks for your service in the Army. Thanks for your son's service in the Navy. Thanks for sharing your mission moment with us tonight. Some of our members may talk to you tonight if they call in later. I know you're going to be available to take their call. So thanks for serving them out of our Phoenix campus in Phoenix, Arizona. Thank you, and great to be with you tonight. So ladies and gentlemen, that's how we start meetings at USAA. We make sure that we keep the membership, the military community front and center in everything that we do. You're the reason we exist. We're here for you. So we're just really glad that you're here tonight. Now we're going to turn things over to Cheryl, and she and Lori are going to take us through most of our content tonight. I think you'll enjoy this, and be aware, there's going to be like a quiz along the way. So be ready to be interactive as well. Cheryl, over to you.
Thanks, Bill, and thanks, Chris, for sharing what you do for our members. So what's so important about Social Security? Why is there an emphasis? Why are we having 2 webinars in less than 6 months? Well, as we look at the statistics that the Social Security Administration gives to us, 39% of the income of the elderly comes from Social Security benefits. I have to say, when I saw that elderly, and we'll see that in a couple other of these statistics, I thought, well, are they talking about people over 90? Because certainly people 62 should not be considered elderly. But unfortunately, they haven't really updated their language at the Social Security Administration. So they define elderly as those who are 65 and above. None of us have to take that personally, but that's just where that number comes from. So 39% of the income of Americans age 65 and above comes from Social Security benefits. The next statistic is also really important, particularly as we're looking at unmarried or single individuals. So 53% of married couples and 74% of unmarried individuals receive 50% or more of their Social Security income. And then as we look at our military veterans, so often we think about those who retired from the military and have pensions, but most people who serve did not spend enough years to have a military pension. And so when we look at our total veteran population, 58% of their income comes from Social Security benefits. And then finally, and this is where we're going to talk about claiming strategies, approximately 1/3 claim their benefits at the earliest possible age of 62, meaning they're potentially leaving income on the table.
Okay, I was supposed to unmute my microphone. I'm 10 seconds late. So we have our first poll question tonight. This is kind of cool math. I want you to think about this as you answer this question. This is a very powerful answer. This isn't just some random thing. If you delay claiming Social Security, how much does it increase each year that you delay until age 70? All right, so go ahead and give your answers. I wish I had a prize that I could give out. Looks like we're getting some good votes in here. All right, I think we have a pretty smart audience. Let's see what we've got. Looks like the popcorn is slowing down in the microwave. All right, Thomas, how are the results? Congratulations, ladies and gentlemen. The majority of folks, 61% of you got this right. It's 8%. So if you're watching on the YouTube recording, you don't see the pop-up here. So I'll just describe this. The answer is 8%. This is a really interesting fact, and I think it's something that is worth discussing. So back to you, Sharon.
Thanks, Bill. And 8% is a big number. We'd all love to be able to get 8% on guaranteed return from a number of our investments, but that number is why it's so important. And so as we look at that from USAA's perspective, our advice is that assuming that you have enough other resources to meet your needs, it is generally better for a higher earning spouse to delay taking those benefits as long as possible up to age 70. Now, that's a general advice, right? Because we really need to take a look at your personal situation, like Chris did in his mission moment. There's other factors to consider, things like health status, where's your longevity, age difference. But we truly believe that couples need to sit down, seek professional advice, and make that decision together.
As Cheryl mentioned earlier in the seminar, Social Security claiming can have a big effect on your retirement plan. So let's discuss 3 different claiming strategies. The first claiming strategy is to claim benefits early. And this claiming strategy is not generally recommended by USAA. Benefits are reduced when you file for Social Security early. The second claiming strategy is to delay claiming and continue working until you claim. Now remember, at full retirement age, you are eligible to receive full retirement Social Security benefits. Now currently those ages are 65 to 67, depending on the year of your birth. Now waiting till full retirement age or older also reduces the number of years you have in retirement. Now, the last claiming strategy is to delay claiming and retire before you claim. Remember, Social Security benefits grow 8% annually when delayed past your full retirement age until the maximum age is reached at age 70. This is why USAA recommends evaluating optimal Social Security claiming strategies. As a retirement income specialist, we help you consider ways to increase your income from other sources to bridge that income gap between the age 62 and the age you take Social Security. We help our members understand their best claiming strategy and implement the appropriate bridging strategies to increase your chances for a successful retirement.
Okay, our next poll. Now, this one's not a quiz. This one's a personal preference. We're curious, which Social Security claiming strategy are you using, or if you're not using one yet, most interested in? So this is really doing some research in real time for the people dialed in today. Claiming early, delaying and claiming, delay to claiming and continue to work, etc. All right, looks like we're getting our votes in, our answers. And it's okay to not be sure. That's one of the reasons that people dial in tonight, is to learn more about what's going on. You don't have to know all these things. That's why we have Lori and Chris. All right, Thomas, what are the preferences here? Okay, so the most popular answer is the delay claiming and retire before you claim, like Lori was just talking about. But certainly there are a number of people that want to continue to work. That's the second most popular answer. And then claiming early. And, we're going to talk a little bit about that, but there are a number of reasons that we retire. It could be that we are forced for health reasons, ourselves, our spouse, another family member, or some other reason. So you don't always get to choose your time of retirement. And that's another reason to call and talk to one of our specialists, because your situation is different than any other member. All right, back to you guys.
Thanks, Bill. And so we're now going to take some of those questions and the scenarios that we received during the first webinar. You know, as Bill said, everyone's unique. And so what we did is we looked at some of the questions, the actual verbatim questions that we received, and put them into 3 broad categories. So in this case, we're looking at someone with an age difference. The member gave us some specifics, but now he's wondering, can my spouse start to take benefits before I do? It's really, though, a 2-part question, because it's also how do we calculate it? So, Lori, we're going to break it down and answer them separately. First of all, can that younger spouse start taking benefits before the older spouse does?
Great question, Cheryl. Spousal benefits cannot begin before the worker has filed. In this scenario, if we assume his wife is not eligible for benefits on her own work record, she would not be eligible to begin her benefits until he is receiving his. However, if she is eligible for benefits based on her own work history, she could file before he does. And if her benefits are less than the spousal benefit amount, she would receive the higher spousal benefit once he does file.
All right, Lori. So now on to the second part. Just how are those spousal benefits calculated?
We get asked this question quite a bit here at USAA. Spousal benefits are calculated using the worker's primary insurance amount. That's what we refer to as PIA, and the spouse's age when she files for spousal benefits. Now, in this example, he was born in 1959. So we know his full retirement age is 66 years and 10 months. So we'll assume he's going to file at full retirement age. Now, she would be born in 1960 to 61, again, depending on his birthday. So she would have a full retirement age of 67. If she files for spousal benefits when he does, that would be October 2026, then her benefit would be 43.06% of his, because she's filing 20 months before her full retirement age. She would need to wait until June of 2028 to receive the full spousal benefit. Now, if he delayed until age 70, now that would be year 2029, he would receive 125.3% of his primary insurance amount. And since she would be past her full retirement age, she would receive a spousal benefit of 50% of his primary insurance amount. That's a big difference. Now, of course, exceptions could apply in some circumstances. So again, it's critically important that you talk to a USAA retirement income specialist about your unique situation.
Thanks, Lori.
Absolutely.
Lots of numbers there and lots of moving parts, but thank you for that explanation. So now as we go to the next one, first we were talking about a married couple with an age difference. Now this question, which also has some multiple parts to it, but is looking at how about a married couple with an earnings difference? So if 50% of the worker's Social Security benefit is more than 100% of his wife's benefit, does that mean she could never earn more than 50%? And also, is that at his timeline, his 100% timeline, when he hits full retirement age?
Yes, Cheryl, there's really 2 timelines and 2 benefits that come into play into answering this question. So let's review the timelines first. Now, the first one would be when you file for your retirement benefits. The second one would be when your spouse files for her retirement benefits. Now, again, for the benefit part, there are 2 parts there as well. The first is the spousal benefit, and the second is the survivor benefit. So let's cover the spousal benefit first. Spousal benefits are subject to what's called deemed filing, which means when you file for either your retirement or your spouse's benefit, you are deemed to file for the other benefit as well. So if your wife files when you do, the Social Security Administration will review her work record and spousal benefits and she will be paid an amount equal to the higher of the two. Now, if she has not yet reached her full retirement age when you do, her benefit will be reduced, as we discussed in that last scenario. Therefore, provided you have other resources, she should delay filing until her full retirement age if she is younger than you. Now, since you stated that half of your benefit is larger than 100% of her benefit, then it is true that she would never get the higher spousal benefit amount even if you delay. But that brings us to the survivor benefits. Survivor benefits are based on the amount of the deceased worker was receiving, including the delayed retirement credits. If you were to delay to age 70, your wife would then be eligible for that higher benefit amount if you predecease her. If your goal is to maximize your lifetime benefits and the survivor benefit, the best result is usually achieved when the higher earning spouse delays claiming up to age 70. Assuming an age difference, your wife could claim her own benefit at her full retirement age and then receive the higher 50% of your benefit when you file at age 70.
Thanks, Lori. And again, lots of numbers, lots of moving parts. Really important to look at that own personal situation. Our final scenario in this group follows up on those survivor benefits. So in this question, we're talking about what happens when an older spouse predeceases the younger spouse. Do they just step in and take the benefits? Tell us a little bit more about that.
Absolutely, Cheryl. And again, this is a very, we get this question quite a bit from many members. The survivor benefit will be the amount of his benefit provided the surviving spouse has reached full retirement age. If the surviving spouse is between the age 60 and full retirement age, that survivor benefit would be reduced. Now, again, deemed filing applies to retirement benefit, not to survivor benefits. If you are a widow or a widower, you may start your survivor benefit independently of your own retirement benefit. Depending on your own work history and the survivor benefit amount, you could claim your own reduced benefit prior to the full retirement age and then switch it to your survivor benefit at full retirement age. Or you could claim a reduced survivor benefit and delay your own retirement benefit until age 70. Many, many different choices there. Now that we've covered these three common scenarios regarding Social Security, I'll turn it back to you, Bill.
Great. Thanks, Cheryl. Thanks, Lori. Ladies and gentlemen, as you can see, one of the great things about our retirement income team is that they've spent a lot of time to get to know the intricacies of Social Security and other benefit plans that affect all of us. Nearly all of our members are covered by Social Security. This is a very popular topic. And being able to talk to somebody like Lori, who's an expert, to calmly go through those things and answer those questions, it's very reassuring. So another benefit of being a member, just really appreciate you taking the time to schedule time to talk to folks like Lori and Chris. Now, what we did from our last seminar, we took the most popular questions, and I see we have a little chat going on that I think some of you can see from our host, Mark McDavid. A number of you have your hand raised. We will not be able to take individual questions through the chat tonight, but you are encouraged. We'll have the phone number to call, and it's in the chat there, 800-531-3392 to talk to our specialists. And you can go on to USAA.com and schedule time. If you search in there for retirement or annuities, you'll find an ability to click to call. We'll have more information, or click to schedule a call. We'll have more information on that later. Now, we've got a rapid fire round. Thomas is going to put Cheryl and Lori on the spot, a whole bunch of questions that our members asked, some of you asked last time. So Thomas, over to you.
Thank you, Bill. All right, Cheryl and Lori, hope you're ready. So here we go. So first question, Cheryl, will come to you. Can you receive your Social Security benefits and still be employed?
The answer is yes. but depending on your age and how much you earn, your benefits could be reduced. Okay, so the Social Security Administration, they consider if you filed for benefits, you really are retired. And while you can get Social Security benefits either on your own record or a survivor benefit and work at the same time, there's a limit on how much you can earn and still receive full benefits if you've not yet reached that full retirement age. And as Lori mentioned, that age is moving, and so it depends on what year you were born, on what your full retirement age will be. But if you are younger than your full retirement age and you hit that earnings limit, then your benefits can be reduced. However, if you're past your full retirement age, you can earn as much as you want and still get that benefit amount.
Awesome. Thank you for that. All right, Lori, we'll switch up. We'll come to you this time. How can I find out what my ex-husband's Social Security benefit will be so I can plan how much I will receive equal to half his amount?
Awesome question. If you are divorced, you can receive benefits on your ex-husband's record if your marriage lasted 10 years or longer, you are unmarried, and your ex-spouse is 62 or older. Now, if your ex has not applied for retirement benefits but is eligible for them, you can receive benefits on his record if you've been divorced for at least 2 years. Now, the great news is you don't have to know his earnings history. Thank goodness. You will need to provide proof to the Social Security Administration that you were married to him and give enough identifying information such as full name, date of birth, Social Security if you have it, and they will look up his records.
Thank you for that. All right, next one, come back to you here, Cheryl. So previous question we had from the last webinar, will you talk about a former spouse benefit? Does the younger spouse need to be 62 before a former spouse can claim 50% of their benefit?
So good question. And I just want to give a little bit of background here. So when you're looking at this question, if you are married, and Lori responded to this when we looked at the first strategy, if you are married to each other, then the spousal benefit cannot be filed until the worker files. However, if you are divorced, you do not have to wait for your former spouse to file. As long as that former spouse is 62 or above, then you can go ahead and file for that benefit, provided you meet the other guidelines, the 10 years of marriage and at least 2 years of being divorced.
Thank you for that. All right, back to you, Lori. For married couples, is there a family limit on combined Social Security payments?
There is not a family limit for combined Social Security payments if each spouse is receiving benefits based on their own work history. 2 high-earning spouses could each be eligible for the maximum Social Security benefit in any given year. However, there is a maximum family benefit that can be paid on an individual's work earning record. There is a formula that is updated annually, but it's typically about 150% to 180% of the primary worker's benefit amount. You can get a quick estimate of your family maximum benefit by checking My Social Security account at ssa.gov.
Thank you for that, Lori. But wait, there's more, and there's even more after this page. So we'll stay at it. So Cheryl, coming back to you. My spouse is 1 year younger than me. Can she receive spousal benefits if I am not receiving Social Security?
Okay, so we've heard this question in a couple different formats throughout the webinar, but it is definitely one of the most popular questions that we get. So we're just wrapping it, bringing it home, making sure everybody gets this. So if your spouse is younger than you, he or she cannot receive benefits, the spousal benefits, based on your work record. But if he or she has their own benefits, their own work history, they can file for that. And then if their spousal benefit would be a higher benefit, when you file at a later date, they can go ahead and get a step up in that payment.
Awesome. Thank you. All right, Lori, switch it back to you. Just do the back and forth here. Is my same-sex spouse eligible for Social Security's spousal benefits?
Yes. Since the Supreme Court decision in 2015, the Social Security Administration recognizes same-sex couples marriages in all states and some non-marital legal relationships such as civil unions and domestic partnerships. Now, surviving same-sex partners and spouses previously excluded from receiving Social Security benefits, survivor benefits, may now qualify for those benefits. If you were in a same-sex relationship with a partner or spouse who passed away, you may qualify for benefits based on your partner's or spouse's record. Please contact the Social Security Administration to apply if you think this may apply to you.
Thank you for that, Lori. All right, Cheryl, one very core to the USAA mission here, related to our military service members. Do VA disability payments affect Social Security benefits?
That's a great question, and another one that we receive quite a bit. The answer is no. The VA disability system and the Social Security Administration are completely separate entities, and they do not impact each other.
All right, very good. All right, Lori, last one for this page. Is there a fee for the USAA retirement assistance that you provide?
No, actually, these services are a benefit of your membership here at USAA.
Awesome. All right, few more here. Cheryl, is Social Security taxable, and what is the tax rate?
So that answer is one everybody hates to hear, but it depends. So depending on your income, you may have to pay federal income tax on your Social Security benefits. That usually happens if you have substantial income in addition to your benefits. So if you've got wages or interest, dividends, other taxable income, there's a formula that's set each year by the IRS, and they look at your income. They determine those thresholds. If you have income that exceeds those thresholds, up to 85% of your Social Security benefits may be taxed, and they'll be taxed at your ordinary income tax rates.
Got it. Thank you. All right, Lori, back to you. Now we have an annuity question here, but these are just, again, most popular from last time. So could you walk through how is an annuity funded?
Absolutely. You can fund an annuity with a transfer from a bank account, a 401k, an IRA, an existing annuity, or even cash value life insurance policy.
All right, this is very similar, still an annuity question. So Lori, we'll stay with you here. If you're already in your 60s, is it too late to start an annuity?
Absolutely not. We have many members that start annuities in their 60s. You know, this is an important decision. So it definitely depends on your needs, goals, your age, and your life expectancy. For deferred annuities, it could be a good choice if you have some time for accumulation. Maybe you want to take and dedicate a portion of your assets to a particular want or need, such as establishing a stable floor to generate retirement income, or maybe you're just seeking a degree of creditor protection. Now, for the immediate annuity, that might make sense if you're really needing that stable source of retirement income.
All right, last annuity question here. Lori, we'll stick with you on it. If I purchase an annuity and die suddenly, is all of that money lost?
No. The money is not lost, and here's why. Immediate annuities can guarantee monthly payments for your life as long as specified. Some members choose a guaranteed payment period that continues into their spouse's death. Others choose to allow payments to continue until all of the initial investment has been paid back to them or their beneficiary, regardless of their death.
Got it. Thank you for that. All right, that concludes the Q&A portion. So let's wrap up.
All right, thanks, Thomas. So just as we look at those scenarios, we're going to recap and say, generally, healthier people tend to live longer. And since the main role of Social Security is to serve as an old age insurance, it's generally advisable to plan on living longer rather than shorter. However, your own circumstances like health and life expectancy could impact that. Okay, so one way that we can evaluate optimal claiming strategies is as a couple maximize that benefit, because one member of the couple or the other may have a longevity or a health issue. Okay, so as we stated before, it's generally better for the higher earning spouse to delay receiving their benefit as long as possible, but it's a really important and complex decision. We heard so many different numbers, so many different strategies today. And so it's important for you to seek that professional assistant, evaluate your options, and see how they fit in your overall retirement plan. Our retirement income specialists like Lori and like Chris are here to help you.
Absolutely. And as a retirement income specialist, we work one-on-one with our members to design your complementary retirement income plan. During our planning conversation, we understand your unique situation. We talk about your goals and incorporate different scenarios, including that Social Security claiming, distribution, and income strategies that can help you retire with confidence. We work with you to truly design your best retirement. This benefit is part of being a member here at USAA, and it's with no obligation or commissions. The best part of this one-on-one session is that it doesn't end with just one plan. Our goal is to provide you with confidence that you're on track to achieve your retirement goals year after year. As we discussed in the previous slide, here's an example of a cover page for the Retirement Income Strategy Report. You know, this report provides a snapshot of your current financial position that may help us focus on your financial resources, your retirement income goals, and your next steps to creating a successful retirement income plan. There are also other resources available. For other Social Security resources, you can view Use Social Security to Optimize Your Retirement Income Strategy webinar at youtube.com/USAA. You can also see your Social Security statement and benefit calculator on the Social Security Administration website, ssa.gov. There are also some USAA advice articles on specific topics that you can find through an internet search for USAA Social Security advice. Some of these topics include, when should I take Social Security? Will Social Security be there for me? How WEP and GPO work? We've talked about a lot of resources, and now Bill's going to provide details of how to schedule your retirement income strategy session. Bill?
Thanks, Lori. Thanks, Cheryl. Great job tonight. As always, it's a pleasure to work with you. You know, ladies and gentlemen, the charts that you saw earlier, that personalized plan with the bar graphs, Cheryl designed that. She was the primary designer of that. And our specialists like Lori worked with her to design that based on how they interact with members. We've customized that specifically for USAA. And that's something that you get personalized for you. And we can do that every year. You know, that's something you can call back and refine, get that plan and update it. So I just encourage you to consider that type of resource. Now, if you're really tech savvy, like my sons, you can use your camera and use this QR code. You've probably seen these things at football games and stuff like that. So this brings you right to the landing page to schedule time with our specialists. We have had thousands of members schedule time with us this year. It's one of our most popular things that members do, and we find it's one of our highest satisfaction things as well. So members have given us a ton of feedback on being able to schedule time specifically with a specialist. You can call now. If you're watching this live, you can call now until 8 o'clock Central Time. Chris, Lori, and others are going to be standing by to talk to you. So you might actually get to talk to Lori tonight, Chris. And then, of course, you can go to our website, usaa.com/retirement. We have tools there. And I think what you saw tonight is our focus on advice. And I'm being thoughtful about the personalization of what these conversations mean for you and your family, whatever your situation is. Thank you for your time tonight. Thank you very much for your membership. As a 35-year fellow member, USAA, I know how much this company means to me and how much it means to you. I get a lot of feedback leading this business, and I really appreciate it. Members really love USAA. And if we can do something to improve, I'd like you to tell us. So please schedule time to talk to one of our specialists. Thanks for your time tonight. Please share this if you liked it with your friends and family. Thanks again to Cheryl, Lori, Thomas, and of course to Chris Stokes. Have a great night, everyone.